everyone. I hope all of you are doing good. So now we are going to start with the target costing. This is our next lecture, our next chapter, I can say, and very important topic. So before going to target costing, I just wanted to ask you one thing that you guys understood the previous concepts, and just let me know whether you have any kind of issue in previous concepts like we have done the cost of quality, we have done the lean accounting, definitely the introduction we have done. We have spent around a sufficient number of classes, a sufficient number of hours over that. So I just wanted to make sure that you guys have grip over that. So let me know, definitely, like tell me that whether you guys want to go for a further revision of all those topics which we have taken earlier, or you guys have sufficient confidence that yes, you can do that. So let me know that. After that, I'll plan accordingly. So now let's start with the target costing. So what target costing is? So basically, target costing is a cost management technique. Now, what is cost management technique? So cost management technique, as the name suggests, is the managing the cost of any company. Okay, we are specifically focusing cost. Okay, so cost, I hope you guys know cost is the the things which is required for making the product, the elements which is required for making the product, the amount of those elements, which is called cost. So target costing, as I told you, is the cost management technique. Now, how the cost can be managed? So cost can be managed by two ways. The first way is the cost reduction. The second is cost control. Now, what is cost reduction and what is cost control? Look, what is cost reduction? So cost reduction, as the name suggests, is reducing the current cost of the entity. Suppose that for making one the packet of biscuit, I require 2 rupees. For one packet, we have allocated all type of costs, and it's taking 2 rupee for making one packet of the biscuit, the Parle-G small one packet. Okay, but now what we require, what we really wanted to bring the cost, where we wanted to bring the cost. Suppose that our sale price is 5 and the company required 20% profit on the sale price. So company want the cost to be 4, below 4. Okay. Now the marketing expenses are other than that. I am not considering marketing expenses in 2 rupees. So marketing expenses, suppose 1 rupee per packet is, and other sundry expenditures are suppose 1.1 rupee per packet. Okay, we have allocated that. So maximum cost of production which we can afford to allocate to the packet is 1.9, because one is selling price, one is the profit we want, 1.1 is the sundry expenditure. So this is in total it's 3.1. So what is left? It is 1.9 only. So target costing sets a target for the cost, like, right? And now what we are trying to do now, currently we are having the cost of 2 rupees. We wanted to bring it down to 1.9 to match our target. To match our target, our current costing is 2, but we wanted to bring it to 1.9. So this is target costing. This 0.1, this 10 paisa, 10 paisa. We wanted to bring down the cost by 10 paisa. So target costing is basically a cost reduction technique where we try to reduce the cost, where we try to reduce the cost. The second is we have done the cost reduction. Now, what is cost control technique? So basically, cost control technique is a technique which keep control over the cost. We do not want the cost to go beyond our current standard. So basically, standard costing and budgeting, you guys might have knowledge about the standard costing or the budgeting. However, we have not done it till now. We'll definitely do the standard costing. But I think in intermediate, if you have read about standard costing, so standard costing, what we used to do in standard costing, we compare our current cost with the standard cost. Like that's how we calculate the variances as well, the material variance, labor variance. If you guys have some knowledge, I am not compelling you to, remember those things. If you guys can easily remember, just 1 second, just try to recall the things that what we used to do there. We used to set some standards. We compare the actual performance against the standard performance. Okay, so we basically compare standard and actual, and if there is any variance, we try to control that. We try to control that. So this is a cost control technique where what we try to do in the cost control technique, we try to control the cost by measuring it as per the standard. But in cost reduction technique, what we try to do in cost reduction, we try to reduce our current cost. So I can say that target costing is a sort of like it is having a feature of somewhere a feature of cost control as well, and most of the feature of cost reduction as well. Because what we used to do in target costing, we compare the actual with the target, or I can say the standard. We require, suppose our target cost is 1.9 in the Parle-G example. My target cost is 1.9 rupee per packet, but my current actual cost is 2 rupee. Here I'm comparing both the things. I'm comparing both the things. So it's somewhere having a feature of cost control technique. But after comparing, what I will try to do, I will try to bring it down. I will try to bring it down. So it is a cost reduction technique. In standard costing, we basically compare the standard and the actual. However, after comparing, wherever the variances come, we try to control that. That is a separate thing that will come. The methodology to, bring the actual to the standard, it will come in the cost reduction. But cost control is setting the budget, making the targets. It's a sort of cost control. So I hope you guys have understood the cost reduction and cost control. Once again, cost reduction is reducing the cost. Cost control is controlling the cost by comparing it from the standard or the budget. So now let's go to the main topic, the target costing. So what basically the target costing is? I'll give you a brief about the target costing in this video. Definitely will not cover the complete target costing here. Here, I mean, in this lecture. In the next lecture, I'll try to complete the target costing. In this lecture, what we'll do, we'll, read a brief about the target costing, and we'll solve one question which is there in CA final study material. Okay. However, there are very good questions in CMA final study materials as well. So we'll do those questions in the next lecture. But the question which is there in CA final study material, that is a very basic one. And I really want you guys to start from the basic and move ahead step by step so that you can get the things easily. Okay. So what is target costing? I have told you that in target costing, we set a target for the cost. We set a target for the cost that our cost should be this only. The maximum cost which we can afford for the product is this one. We will calculate the target cost, that maximum cost which we can afford for the product is this. And now what benefit we'll get from the target costing? The benefit we'll get is that after getting the target cost, the target of the cost, we can compare it with the actual. After comparing it with the actual, we can come to a conclusion that yes, we are somewhere lacking in our strategy or we are doing good. If we are lacking in our strategy, we will now go to cost reduction technique. We'll go to cost reduction technique, and if we are doing good, we'll try to maintain it. We'll try to set some standard. We'll try to maintain it in the future as well. So this is target costing. So let's go to one question. I hope this is very brief about the target costing, but I really want you guys to start from one question, because we could have a better understanding of any concept by a question. You know, because the reason is that question contain data, and our mind analyze the data very well. Okay, so we can, since we can analyze the data very well, let's start with the data. So let's just a second. So let's start with question one, target costing. Let's go to the question. One second. Okay, this is open. So let's read the question first. The Kowloon toy company expected to successfully launch Toy H based on a Disney character. Okay. The Kowloon toy company must pay a 15% royalty on the selling price to to Disneyland. So read that first cost is the royalty cost on the selling price, which the KTC will pay to the Disneyland. Okay. So KTC target a selling price of 100 rupee per toy. So royalty amount would be 15. Okay. And profit of 25% on selling price. Profit, they are targeting a profit of 25% on the selling price. Okay. Now, the following are the cost data forecast. That component H1, 8 rupee 50 paise per toy. Component H2, which is required to making the toy. So component H1 is 8.5 rupee. Component H2 is 7 rupee. Labor is 0.40 hour at the rate 60 rupee per hour. So basically 0.40 hour means 2 by 5 of 60 or 24 minutes. So we require 24 minutes to make a product. Okay. And 1 hour labor charges is 60 rupee per hour. Okay. Now product specified overhead is 13 rupee 50 paise. Product specified overhead. Okay. In addition to the above, the each toy require zero point 0.6 kg of other material which are supplied at a cost of 16 rupee per kg with a normal 4% substandard quality. Okay, let's read it once again. In addition to the above, the toy require zero point 0.6 kg of other material, or toy require zero point 0.6 kg other material which are supplied at a cost of 16 rupee per kg with 4% normal substandard quality. Important, 4% normal substandard quality. Normal substandard. Since it is normal, we'll consider it. Determine the above cost structure is within the target cost. If not, what should be the extent of cost reduction? So we need to see whether the current, we know what the target is. We know what the actual is. Just compare both and see whether we are meeting the target or not. If we are meeting, it's very good. If we are not meeting, sorry, we have to improve that. If we are not meeting, we have to improve that. So let's write down the question once. The target data, sale price, it's given to us. Look guys, I really want you also to note down the you know things which is given in the question before going to the answer. I mean, don't just start answer there, writing the answer directly, writing the answer in the exam. Okay, I really want you guys to start from the question only. Just brief, write the question in brief in your answer sheet. Now, profit, this is also target profit 25%. So this is 25 rupee. Now, royalty. This is 15%. So I can say 15 rupee. So targeted cost other than royalty is 60 rupee. Target cost other than royalty. I'm specifically writing other than royalty because why? We have already considered royalty over here. What second method is, just consider these two things up to here 75, and now you can consider this royalty in the actual. But since it's the selling price is the target selling price, that's why I'm comparing it over here. The second method is always open for you. You can just write 75 over here and you can consider it in the actual. Okay. Now the cost data forecast. Forecasted cost. What is the forecasted cost? Component H1, it is 8 rupee 50 paisa. Component H2, it is 7 rupee. Labor, it is 24 rupees. Product specified overheads. Product specific overheads. It is 13 rupee 50 paisa. And other materials. Now, this is good calculation. Other material. Look, that we do not consider the normal spoilage or normal material. We consider it as a normal item. Okay. Now, since it is given here, 4% normal substandard quality. So suppose we require 0.6 kg, 0.6 kg or 600 grams for one toy. Now I'll order 600 grams. So what would be there? What thing would be there? Normally, what used to happen that when you order 600 gram, na, so 4% would be substandard quality. 4% would be definitely of the substandard quality or below standard, which you could not use. So what you do, you require 600 grams of good quality material. Now, since you require 600 grams of good quality material, what you do, you order that much of amount that after reducing substandard, you have 600 grams. So you require 600, and now 4% is, uh, you know, 600 gram and 4% is the normal spoilage. And what is the price of, I can say 1 kg? It is 16 rupee per kg. So I can say 16 rupee is for 1 kg. So for grams, it is divided by 1000. Look, guys, it is a very simple calculation which we used to do in early classes as well. Like we used to write the complete definition for that, now the reasoning, the definition. What if one is for this? Now if 600, after 600 you are getting 4% spoilage, for 1% you will get this much spoilage, like this. Okay, so if you guys want, I can tell you like that only, but we are not child, that's why I'm not telling you this. So I hope you understood this thing. This concept is easy in my opinion. Still, if you have any problem, contact me separately. So just solve this equation 600. Okay, this is 0.96. Now calculate 16. Now 1 second. 16 multiplied by 6 divided by uh, divided by 0.96 divided by 10. So this is basically uh, 10 rupees. This is 10. So the cost of other material is 10. Okay. So we require 10 rupee cost other material as well. So now what is the total cost? Total forecasted cost. What is the total forecasted cost? Just a second. What is the total forecasted cost? Just calculate this. 8 rupee 50 paisa plus 7 plus 24 plus 13.5 plus 10. It is 63. Now, we are not considering royalty over here. We are not considering royalty over here because royalty we have already taken here. That's why we are not considering royalty over here. So I can say my target cost is how much? 60. My ac- my forecasted cost is 63. So we are having cost rupee 3 rupee more cost than our target. So we need to aim to reduce our cost by 3 rupees. We need to reduce our cost by 3 rupees. So this is the solution, final solution. So like this, with this, we have completed one question of target costing. Definitely target costing is very big, not very big, but yeah, it's somewhere big concept. So it would not be completed really easily. I really want one more class for that because I really want, because this topic has good and sufficient number of questions in the material of CMA finance. So I really want to solve those questions as well, some of those questions, so that concept would be more clear for you. But for today's lecture, for this lecture, I think this is all. Uh, in next lecture, definitely we'll try to complete the target costing. Uh, so thank you so much for the day. Have a very nice day. Bye bye.